Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up 1% on the S&P. Nasdaq is also up 1% today. Semiconductor did have a higher numbers today. Semiconductor's been getting harder though last couple days. So it looks like it bounced back stronger today with a 2.6% positive on semis. Dow about 1, Russell 2000 also close to 2.5% there. Banks and energy, a little over 1% there. Transport's up 1%, biotech 2. Emerging market is up a little bit. Grayscale Bitcoin continues to see weakness there, down 3.5%. Gold, silver, GDX are up all 1, 2, 3% there, and that's a good sign. We've been seeing gold and silver and the miners seeing some upside momentum in the last several days or so. Oil's down about 2% there today. Dollar's down a little bit, pretty much flat. Treasury bonds flat. VIX is down about 6%. Let's stick with the spider. S&P 500 ETF 65-minute chart here. So let's quickly do a follow-up from what we talked about on the last night's analysis. So the last night, the market closed where? This is where it closed, right? So and we looks like it gapped down today this morning, right? You can see that this is where it closed. We gapped down and quickly we saw that dip got bought up. And I think, and so one thing that I talked about on the last night's analysis, especially for the bulls, for the buyers, first thing is first, buyers must what? Reclaim the short-term moving average and then go up and fill this gap. That was a buyer's objective for today, right? We also talked about oversold, extreme oversold condition on the oscillator, which we'll look at a little bit later in this video. So we've anticipated oversold bounce today, and buyer's objective was to reclaim the short term and to fill that down gap that was open from yesterday, right? Yesterday morning. So look, as you can see on the first hour, we made a move all the way to the short-term moving average. You see right here, right? We faded a little bit. We closed the first hour just right on it. On the second hour, we opened up just right on that short-term moving average. And once we were able to close above the short term, and then that's when things continue to make a move to the upside. We fill the gap, right? So normal situations, what happens is once the gap gets filled, it usually acts as instant resistance. And that's probably the reason why we are, going up, grinding higher, threading carefully. But you can see on the last hour, we actually saw thrust to the upside above the once that after the gap got filled, and this is more rare occasion. It does happen. I've seen it happening maybe several times in the last year or so. Usually, when the gap gets filled, it acts as resistance, and usually stays beneath it, or you will see some kind of a red candle or something like that. But this time we thrusted above it. And that tells us that there's a lot of buying pressure that happened today, because you can see gap down and then all day long. We didn't even see any kind of red candle today. It's all green candle. And then once that gap was filled, and look at that as a resistance, we just pretty much broke out above it. So there's a tremendous micro-term buying pressure that we've seen today. We're now back above the short-term moving average. Moving average is now rising higher. This gap has been filled, so I'm gonna get rid of this. But this gap now, bulls are going after that gap. So let's zoom out here. Obviously, tomorrow, best case scenario for the buyers is gapping it over. That will be the probably most smooth transition that bulls are wanted to see. So you don't have to deal with this resistance. That is the all-time high resistance coinciding with the gap area. So this is going to provide some hecticness at least for the day tomorrow. So best case scenario, gapping it up. Let's check out how much of a gap up that's going to be. It's very much doable. I mean, you just need about 0.4% gap up. That's not a big gap up at all. 0.4% gap up. That's always going to take 0.35% gap up. That's not a big gap up. It's very much doable. That will be the best case scenario. So you don't even have to deal with the resistance and have a smooth transition to the upside. Let's zoom out here and quickly take a look where we're at as far as a midterm is concerned. Well, we've seen some of that before. We've seen the steeper corrections here and here and here. And so, and I actually look at this kind of like a consolidation for the last several months. Market really not seeing that big breakout. And I think that's kind of what we're witnessing here in this April. And the market seems to be ready to get back up to the all-time highs and fill this gap. But the gap has to be filled. So things are looking pretty bright right now. But if this gap doesn't get filled, we start to fizzle here, not filling this gap. Keep in mind, we may come back down to retest a short-term moving average if this gap doesn't get filled, right? Let's check out that oscillator here. So we talked about this oscillator. We also did a little bit of back testing yesterday. So the last time we got into that extreme oversold level, you can see I can go all the way back to November. You can see all the way to going back to November here. The only time we saw that extreme oversold, because I can go back and do this, you can see that only 2 times it happened in the last 6-7 months was back in early March, right? And last time we talked about that was right here. And we did see pretty strong up move then. And that looks like you can see the oscillator just made a big jump to the upside after hitting that oversold level. And we even gotten, filled that first down gap and then thrust it above it, which we talked about earlier. It looks like it's not overbought at all. We still got room to move here. The buyers really want to push it. They can certainly push it. We still got room, another day or so, at least couple hours before this thing hits the overbought level. Before it hits the overbought level, bulls got room to move. Bulls got energy left. So I think the battleground is going to be this level right here, 417.50, the all-time high resistance and the gap area. Again, gapping it over. That's only 0.35% gap up tomorrow. Will be the best case scenario to have that smooth transition. Another scenario, again, the gap doesn't get filled. We start to see weakness beneath this level, that gap area. We will come down and retest a short-term moving average. So it's best that bulls fill this gap as quickly as possible or gap it over. We start to fizzle too long here, not filling this gap. Things can get hectic. I mean, the worst case scenario, bears might even push it back down to 411 if this gap doesn't not get filled. That gap must be filled if you want to see new all-time highs and beyond. Let's see how the market plays out. You guys enjoy your evening and good luck trading tomorrow.